Now, here's something else that's shaken the markets. The European Central Bank has slashed interest rates to an all-time low of just 0.25%. The bank says it was worried that Europe was facing a prolonged period of low inflation combined with weak growth across the continent. The decision sent the euro slumping against the pound. Not good news for British exports. Our economics editor, Faisal Islam, is here. Why on earth has the ECB done this?
There's quite some shock from Frankfurt, John. Essentially, the core economies in the Eurozone, whilst they're out of recession and not mired in the 3 or 4 year long crisis that we've been reporting, they're still pretty weak. The core economies, France and Germany, for example. And Mario Draghi, the president of the European Central Bank, took advantage of the fact that inflation has fallen really rapidly over the past year in Europe, from nearly 3% to under 1%. This is how he explained the shock move earlier today.
The economic analysis indicates that we may experience a prolonged period of low inflation, to be followed by a gradual upward movement towards inflation rates below but close to 2% later on.
So Mario Draghi, yes, he governs the European economy, the Central Bank of the European economy, massively important person for our own economy. It was his words 14 months ago to do whatever it takes to save the Eurozone that turned around the crisis there and provided the foundation for the recovery we see in Britain. And he's fearing these low inflation rates. Not quite deflation. We've only had deflation in Greece, but fearing that it might spread in Europe. So he's cut interest rates again.
And implications for us?
Yeah, so in Britain, remember the famous policies of Mark Carney that interest rates will stay lower for longer. There's been some pressure on that because our recovery's been stronger than expected. This type of pressure from Europe maintains the original stance. It means that it's more likely that rates will stay lower for longer. But there's another impact, which is if you look at the comparative inflation rates between Europe and Britain, let's have a look at a chart showing that. You'll see that in Britain, inflation's pretty much been at 2.7 over the past year, nearly 3%. In Europe, it's absolutely fallen from that level to 1.1%, even to 0.7% over the past month. And that's because of energy prices. Energy prices falling in Europe, yet maintained in Britain.
So bad news on exports, but we have to wait and see the rest.
We'll have to wait and see on the impact, yeah.
Matt.
Thanks, John.